Good morning, good afternoon, and good evening to you all, wherever you are joining me at this hour. Welcome to 104 edition of Investdata Trading Academy Live with Ambrose. I will tell you that the market globally remain mixed at this moment, but nevertheless, I will also tell you that this is the time for you to be very well, very cautious. At the same time, apply your word, your stop loss, apply your entry and exit strategy. At the same time, apply what we call the support and resistance technical tools to manage risk at the same time to stay ahead of the market. I will tell you how to speak now. No, in the face of the continued rate hike across the globe, as fear of recession impact negatively on oil price as it continue to oscillate to stay below or to decline for two consecutive days to trade at a 103.5 per barrel at this hour. It tells you that you can see how this trend is also moving the market up and down. Just as more corporate earnings are expected to hit the market across the group, and we can see that it is the result that are coming is trying to what you know push on confidence in the market all this while. Despite opening up early in the morning in the green, then later in the day you saw miss trend and close positively or negatively. But I will tell you that the confidence on the earnings that have been released is what is pushing the market to remain a bit stable. Like in the matured market, I will tell you, like stocks in US, as they are coming to low up, like they're having a bear rally at this hour, and this bear rally tells you that is it to be kind of a bear trap or a bullish trap, or is it to be penalty end of September? These are what we are looking at because in the mature market, the recession may come back what in October. But because in that environment, most of the market across the globe have declined, why our hours here has remained a bit up just because of what the perception of the market, the confidence, and also the general trend that is happening globally. Some political issues, some the distortion in supply as Ukraine and Russia since February has changed the face of the global market and all and global environment. These are what is influencing the market as we speak. But this should not send any panic to anybody in the market, as I always say. EU finally, sorry, the ECB finally raised the interest rate by 50 basic point as expected yesterday on Thursday. The zone or the region purchasing manager as we speak now showed a sharp word weakness as reviewed by recent data published. But the geopolitical crisis in Italy has finally led towards the prime minister resigning and also to also dissolve the cabinet by the president. Can see all this also influencing that. But as we speak now, I will tell you the mystery that US market is down, Dan Jones is down, we can see S&P and Nasdaq in red, while the Europe stocks are up despite the mixed economic data and the political crisis around that region. It tells you that investors are really looking at if market can be up in this at this moment of that zone or that climate, that they are also seeing opportunity in some. So that's why I said no matter the situation, you need to look at where is the state of the economy, what cycle is the economy. You look at also what phase is the market, that the market cycle. Then you now look at your technicals to know exactly what is the pattern. Is the market in that overbought, oversold? And you know when the market is at oversold and overbought, they have different way of what of moving. These are the things that you're also watching there as they sustain the market. But in Asia market remain missed as we speak, just as it was yesterday. So they at this hour it still missed. Africa market also remain missed as we speak now. Our market here in Nigeria is slightly in red, just slightly in red. But I believe that the rate market is reacting to the 100 basic point adjustment rate is for me it's not too bad, it's not too sharp. Tell you that this confidence that result might maintain the Q1 pattern is what investors are looking at. They want to see this number really. But there's one thing that is very, very important as we're expecting the number now. Don't forget that as far the economy goes in economy expands and also contracts, also financials of companies also in that direction expand also contract because we know that an equity market or stock market is a leading indicator. But whatever that's happening in the economy as it was also affecting these companies that are listed on the exchange. That is why you as an investor you need to look at what is the state of the economy it was expressing a contraction. Now, if you look at what has happened as we have discussed in our the phase of the market phase and also economic phase, we're already seeing a contraction because of the rising inflation and interest rate in the economy, and that also have affected our output, national output or industrial output, whatever I call it. It's also coming down, and this rising inflation is not a result of only interest rate no hike. And no, we're also seeing that the no high cost of production has also contributed. That means as we are seeing a contraction and expansion, also we expect the company's result also to be affected in that direction. Either we see expansion in the result, impressive one, or we see result contract that disappointing numbers. But it is this number that also will feed on the market, and also price will feed on it. That is why at this hour, as all eyes is on the prices, on the earnings expected, you look at to know the state of the market of individual the state of the market and individual sectors and the company. That is why today we want to look at the last stage of our discussion. We have a different thing we're discussing as we are doing a sectoral rotation. What we use to guide you, we'll talk about the economic cycle, we'll talk about the market cycle. We have discussed economic cycle and market cycle. Today, we want to look at the technical pattern or the cycle too, also because the technical pattern we have know that we have what we call the overbought and oversold cycle, which also want to discuss this morning before going to looking at the state of the market. This is our point of discussion at this hour. Like I've said earlier, know that this is the what you need to combine with others. We have seen the economy, we have seen the market phase, the bull and the bear, the top and the bottom, and also the we saw the or discuss the accumulation, markup, distribution and the decline. But today we're looking at the chart pattern, also looking at these two major topic, overbought and oversold in the market. How will you identify this, and what will guide you, what technical tools are going to use to also know that markets overbought and oversold region. And quickly, when I've called up what we call the relative strength index, this is what will tell you quickly know overbought and oversold situation of the market or state of the market. Once you're able to gather with this, you will know that yes, the market is still strong or weak. And when markets are at overbought region, you will know what is going to signal. A signal, that people at that stage will also want to start shading position, start taking profit. As you see, the market will start coming down. But also, when you see that the market has over sold region, you see naturally it start attracting attention that people want to see that okay, there's strength here, and that also will push the price up. This is what we want to use both for the market and also for the individual stock. It's very, very important because I believe it's going to go a long way to guide us. And also, don't forget that when there is a kind of a rate hike, those what we call the growth stock are affected much than the value stock. And this time now, you want to know who as you are considering it, which sector will this cost going to affect in terms of financial cost, in terms of the cost, the distortion or the supply chain that we have seen, the demand chain, or that's going to cost on many sector that their earnings at the end of the day, their performance will start dwindling. With this overbought and oversold, it tell you actually where the stock are going to a level or a sector are going to the level it has finished the what we call at that overbought region. Gas has started diminishing, and there's no strength to go further. What? Because at that overbought region, market is about perception, confidence at each level. If that at that perception that everybody's saying that at that time market is at overbought region, market will go down, market will go down. Confidence also start dwindling. That also support the market to go down. But when the market go to a level again, you see perception that this market is at oversold region, this market is cheap, it's undervalued. This also attract entrance. Before you know it's also perception, price to start going up. You need to know what to guide you. And today we're going to look at this what we call relative strength. Then we have a what we call, if you look in between here, this is 60, after 60 we have 70 here, then this is 40, after 40 this is 30, and this is the range. Some can adjust it to 80, 20, depend what you want to use. But I think for now we're going to use this 70, 30 to guide us so that we will be within the range that we want to be. Because if you look at our market, all this while it's a long trend, but this is a day chart. But I want us to go back quickly to the monthly chart to see with the where we are now, looking at the RSI, which is also a momentum indicator that want to guide us how to know where the market is, face of the market, whether it's at oversold region or overbought. Because when markets at oversold region, it's expected that it will trigger a sign, a signal for what that this stock is seriously cheap and market has gone to this level, you cannot go further now. You see attention will start coming. But when it's also at the oversold region, overbought region, that same perception also turn the market. That's why I said it is the buying and selling that determine the market. That is the perception of what the buyers and the sellers and the sentiment in this that determine where price will go, where market will go. Once there's a positive sentiment and you see more front entering the store, it start going up. But when you also get a level that start coming down, people are selling that this market is at an overbought level. I start coming down, it will get a level again, it will turn off to also be oversold. That's why you need to always look at them using this indicator we're going. At this stage now, you want to see what I want to give you is a clue here that you understand. You look at this what we call this Osher index movement. You can see here where it started. You can see an uptrend. It enter when they cross 70. All these ones are over so region. You can see that perception to a level. When it slowed down here, you saw it here before it continued to this level. You can see that when it finally entered a decline phase, what followed, you saw it here. But at this stage of, let's say, accumulation again or up and down, you can see that it remained within the dark the shade here, which is between the 30 and the 70. Then what once it crossed up or down here over bought here oversold, but it remained here to tell that there's still relative strength in the market. But once it start moving up, you can see it started to follow this trend. It also come out to oversold region. Before you know it, you can see it didn't stay much here. At this level, you can see it started also coming down. You saw it here. You can see this trend whenever it goes out of this range, can see a sign. It don't stay too long there to correct. These are what is also is equally guide you. But here it touched the 30, which is the almost the oversold region. It touched it here. You can see that after touching it, it started going back again. As we speak, market remain on a strong trajectory. For me, it's a good one for the market. But now the market has also overbought region from the what we are seeing now. You look at there are some sectors that will even sustain despite at this level, it will still go up because of the perception of that sector or individual stock. These are what you want to look so that you know exactly when to start jumping out or when to start jumping in. But if you're in a good stock now, I don't need the experience for you to panic. You want to see the numbers of this company that was built, and when it comes and it go then. But don't forget that once it's above 70, but that the price will turn down is very, very high. But what you do at this stage now, you start taking profit. After you have moved from here to this level, I don't say unless you are greedy, you have to know that you should take profit. When you fail to take profit, this same market that deliver this profit for you also, when it start coming down, you notice it here, you notice it here, you notice there, you want to take up the profit that I are giving you. That's why you must learn how to take profit. That's why I said your training your plan is very, very important because you have a profit target as you are entering your exit and entry strategies. These are very key at this moment because this is very, very key when you are using overbought and oversold, so that it will help you to know exactly what to do at it with time. And also, after using oversold, also you can equally use with the candlestick. Look at the 200 moving average to see simple moving average to see where it is. When it is low, it's signal also below it. When the indicator is below it, it's also triggered that time for what for a bank is also around because that broken down. You want to look at it also when it drop above it, it gives you sign again to know that it's at the support level. When it's also above it to a level, also give a sign that this also activated. That is why when we use our T line, which is the what I call it a Fibonacci, or exponential moving average 8. That is very, very important because it combines, looking at what is happening to give you buy signal and sell signal. But as a good trader in anything you are doing in the market, when you are doing sectoral rotation to one stock, you must also know how to consider the technicals and the fundamental because you need to marry the two. The two have to shake together and together to know exactly what is happening and where you should be. Because when there is no positive fundamental, you can see that the industry where you are will have other factors that will also support that rally. That's why it's very, very important to always look at it. Because when you are doing sectoral rotation to any stock or you are selling one to go down, these are the things that should guide you. That selling and buying is very, very key. And that is why I don't play with sentiment reports because it gives you an insight what is happening generally before it comes to that state. For me, it's very, very important. I know that with this, you understand how to catch your overbought and oversold. In any industry, the same thing you can do it for individual indices, do it for the market, bid for stocks, and if you get, and also like I say, when you see an industry that is doing well, and you see that the leader has a little pullback, the time for you to buy. But before buying, you need to chart the stock to know the face of that stock in terms of face, market cycle. Then now go to technical to see is that overbought or oversold. If there's a sign of oversold, you know exactly what to do at that particular time. That's why you don't need to worry at all when you see market oscillating. Let your what technical tools guide you, and also you follow the pattern and also the market direction at any given time. Is very, very important for us to know. Yes, before we go to the state of the market, I give you the results that were released just recently to the market, so I can look at it briefly. The ones that I consider attractive that we should look at. One is Africa Prudential that was released yesterday, and Triple G. Triple G was just first quarter for financial ended no June 30th for a March year account. I'll tell you this number for me is just a signal that they are coming out from where they are, from a negative no PAT to positive. You can see that the top line was up, moving from 256.87 million to 467.37. That is about 82% up. Okay, PAT moved from a negative 5 million, 52.5 million to 2.4 million. Within about 104. But this is just a negative, from a negative position to a positive position, which is good for the company. EPS moved from a negative 12 kobo to positive 5 kobo. You can know, before now that this company, when they were, activities in the banking sector where they are talking about check and all those stuff, were using a kind of dividend warrant. For now, I think this, business has really, unless this company with this number is telling us that they've diversified their business to another thing entirely, that would be nice. But I believe that it just, a start. You need to keep your eyes on the stock. But one thing that the volume of the stock is very small. That's why I tell you that as a trader, you must know what the average volume trader, so that you won't be the one that push money to that the stock will go. When you want to say it comes down, it makes no sense. That's why this kind of stuff, just for us to mention it and see. But the real one we're going to look at is the African Prudential. We can see some little improvement. That's why that the number is missed for me. But I believe that I can see that there's this trend from the result. We have seen that this company is also diversifying their operation. You know exactly that gradually the digital business is dying in Nigeria, because if you go to other advanced countries, we always tell people that we don't need to go to register for any other thing. Like today now, the unclaimed dividend in Nigeria is a result of register, activities, because most of them used to take advantage of the money to do one or two things. But in advanced countries like either US or UK, you can see that they have a central settlement system where all these things are settled. You cannot see what is happening in Nigeria today. Sukuk and all the other bond have been handled by CACS. If with time to reduce this unclaimed dividend, now that federal government is eyeing it, they're moving it to have a trust hold for that. But I tell you, the districts have contributed immensely to this kind of fund, or this kind of situation of on this alarming unclaimed dividend. But I believe that as far Africa Prudential is moving, they have gone ahead to start diversifying. From the result, you can see some digital activities that started impacting on their bottom line. We believe that if they can reach well, at the beginning when this company was were kind of diversified from UBA, the first 2 to 3 years, Africa Prudential was the one even outperforming UCAP, before UCAP now overtake and start running. But I still see potential in Africa Prudential. The results also for me is not a bad one, but want to see more of improvement in Q3 before we can conclude. But as we speak now, the gross earning of Africa Prudential moved from 1.67 billion to 1.99 billion, representing about 19.2% up, which is good. Then PAT in that direction also moved from 827.6 million to 935.8 million, representing 13.1% up. Yes, you can see that the numbers are still in green. There's a growth, but we need more. EPS, this translates to EPS of 47 kobo from the previous year, 41 kobo. Not a bad one, but the company profit margin declined from 49.11% to 47.23. Yeah, despite the decline, I would say that this profit margin for me is a good one. It tells you that also, yes, you cap now a profit margin, and these are almost the same. It says that these companies have taken steps to also reduce, manage their their expenses in this kind of environment where we see costs here and there, diesel costs and all those stuff. But with the number we're seeing that they're able to manage, or less as we expect to see the third quarter and see how far the world manage, saying that the high cost of operation and the finance has already hit most of the manufacturing company result. We believe that this related other financial business might also do well. Like what we saw in UCAP, this also maintaining that tempo for me is not a totally bad one for the market. For me, let's keep our finger. If you're an Africa Prudential for dividend, there's no cost for alarm. With the number we're seeing, dividend is also assured to a level, because it is this number that determines what they pay you at the end of the day. If there is no good earnings, you expect to run no dividend. But the number we're seeing as our Q2 for Africa Prudential is a good one that will tell you that dividend is likely also to come. Yes, before we go to the chart, to the daily market to see, I'll tell you that the market news as we speak now, that we're seeing that insider dealing no notification also was made available by UCAP. UCAP done at 12 naira 70 kobo. But I'll tell you that the unit that was involved, the unit that was involved, the volume that was involved is relatively small. But also we're seeing more notification for board meeting and the close period. We notice that Presco notify the market of its board meeting. And MPF Microfinance also have done so, and also Japan's good. These are the market news. But we want to look at the state of the market now. Let me quickly go to the day chart. So I'll go to the day chart to continue our discussion. If you look at the state of the market as speaking now, market is slightly in green, in red, so you're at 52,118.86. Market is down 3.14 points. It presents about 0.001% down. But the fear here, but that's why the market is still, we have not seen a major decline here. We've seen that the market rate is negative, as we're having a 9 decline at this hour, and just only 2 gainers as we speak. That is the concern here. Today is Friday. We understand market has been the red from even at the beginning of the week to this moment, especially after the NPC. But I'll tell you, these 2 gainers alone at this hour is a concern for me. But let's see how the market is going to close today. We'll have among the the 9 losers, we have Honeywell leading the pack, followed by Flower Mill, and these are like the same industry, and Twin Brother, followed by Multiverse, Transcorp, and Owando. You can see the life of Fixing, GSK, and GTCO in that category of losers. But the top losers are Honeywell, Flower Mill, Multiverse, Transcorp, and Owando. But on the other side, if you look at the gainer side, we just have only 2 gainers: International Brewery and NACO. NACO that marked down, or yes, you can see that the price is starting to rebound, but let's see how far it will go. But it's on the gainer start now this hour. Then if you look at the top trade in terms of volume, we'll see the life of Flower Mill leading that pack, followed by GT Code, Zenith Bank, Dangote, Sugar, and the Fidelity Bank. These are the top trade at this hour. But quick one, want to look at the market, the state of the market, which using our chart to see, is the market still strong? Is like I will tell you, once you want to know the direction of the market, always bring out your T line to see whether it's anything that is trading above the T line. Say that the market, once you cross the T line down, the sign of fall for you to go to cash, to sell off. Then when you also come back and bounce, you jump in. It's how to manage also risk anytime you are in the market. Quick one, time we're going to look at the NACO, look at the Flower Mill, look at the Zenith Bank, and Fidelity, and GT Code. Then we'll look at also what is happening in Transcorp. That Transcorp is showing sign of weakness. Then if that permits us, we'll chart the Fixing as we speak now. International Brewery, we can profit taking. Just try to rebound. You can also look at the chart. That I don't comment on the chart on the stock, but I will just show you the chart to see if that permits us. This is what we want to do now. Yes, we want to quickly call up our T line. We have our RSI already there. Let's call our T line. See, let's call our T line. Let's call it up here. It's very, very important. And money flow. These are the two we're going to join. Add to 1.5 money flow and the T line. Yeah, change that T line to what? To 8. to 8. Yeah, you can see this is the market now. Like I know, if I want to see is the market already below the T line, I want to confirm and see where what the market is doing for the straight almost okay for the straight 5 days. Now you can see the market was up marginally on Monday. You can see other days but still like form of side trending, trying to consolidate because of this strong candlestick here until the market take off this before we can say there's panic and go below the T line. As we speak now, market is still slightly above the T line. You can see for yourself here. That means in this regard there is no cause for alarm. We are still watching, and I know that between now and end of the month we'll see more results that will change the face of the market. But I always say that we expect surprises and also disappointing moments between now and then, but depending on the state of the number we're expecting. And that is why your stop loss is very key. Any position you have taken ahead of earnings and it comes, it didn't hit your target and started going down, let your stop loss quickly guide you and for you to exit that position is very, very important. You can see from the market now, market is still above the T line. But if you want to look at what is the RSI telling us, RSI is reading above 50, which is good at the center here between 30 and 70, about 50 in between here. Once it's above the 50, for me, it's a good one. Let them there's still strength in the market. The only thing that should be serious concerns for us that money flow is still coming down. That means there's less position, less fund entering the market. That's why money is also leaving the market. We believe that once we start seeing earnings, it will attract more liquidity, more positive sentiment, increase the momentum in the market. That is what any that comes with any season. It does the numbers are coming, in trickles, just little by little, one after the other. If we're seeing good numbers, coming in a mass, that will also change the face of the market. And don't forget that the institutional investor, they don't rush to buy as to buy. As retail investor or high net worth investor that are not professionals to a level, but those institutional investors, because they are professionals, they understand the market. When they see results or economic data, they do analysis before they jump in. But not see that the day you come with the result, with that fantastic result, it's only rally for that they gain about 5.8%. We have seen that stock remaining flat, pull back the next day, remaining flat till now. But I believe that once more results see the market, as they analyze, they will take decision between now and the end of the quarter. That means your position you are taking, don't panic, go and watch. But if you are in any marginal loss, just believe that if earnings were expecting beat expectation, you want to reverse the state of your portfolio. Don't need to panic. Quick one, let's look at what is happening. Like I said, in flower mill, we'll make it snappy, just because of our time. Let's look at flower mill. Flower mill on a day chart is trading below the T line. You can see it here. You can see has gone below 50 and money flow is looking down on a day chart. Let's quickly look at 1 hour chart. For me, 1 hour chart is also below the T line with strong volume and money is moving the stock. You can see there's a position, sell position. We're seeing more of a bearish situation on the stock than a bull. People are selling and can see it here as shown by the, the, the price action and the other indicators. Let's quickly look at GT code. What is the state of GT code? GT code continues to go down. What are you doing in the granddad position? Is it time for you to jump in? Yes, you can do that at long term that are interested in dividend can take advantage of the low price to be taking position. You can see that flat on the T line now on a day chart. Money flow is still looking up but trying to cut down. I believe that as it trend below the T line, you have to wait for those that are traders to break out. But for those that are long-term investors, this low price is good for you to take advantage of low price and position for the entry dividend and the full year dividend. You can see even when it was rallying here, you can see the way the relative interest was not too so strong, but it grew gradually before coming down. You can see it here. These are the things you need to know. But now that we're seeing it almost at 30, it shows that it's the right time for you to start buying the stock. Okay, the money flow is down. It will start looking at the stock for those that are long-term investor. For Zenith Bank, It's a good one that will check Zenith Bank now. Let's take a look at what is happening in Zenith. What is happening in Zenith. Zenith, I see Zenith also trying to form almost a triple bottom here. Now slightly below so the T line. Fund is also leaving the store, looking down, and relative strength telling us a sign of weakness. I know that whenever I get to this level, you can see so rebound. Let's believe that once the momentum will go to this level, the spirit of rebounding is there. And also, as we're looking forward to see the actual dividend and actually earnings, let's see how market going to feed up. It's all about participation. I believe that the banking stock at this price all are relatively cheap because they show sign of what value, and also we expect that the increment in interest rate for two consecutive period will be a plus for the financial market, which I believe banks will be a major beneficiary for this policies. That means you can see this pullback as opportunity to buy into banks stocks. Then quick one, let's look at Fidelity. Look at Fidelity Bank. I see Fidelity Bank too. I see all this while it has been below the T line. And now we're seeing that after touching almost 30, trying to bounce back and see if it cross off this T line, it makes it very good for you to position. And also, if at this point you see money flow turning up, good stock to position, you can see little green here for me. This on a day chart. Let's look at the 1 hour chart for Fidelity. On 1 hour chart, the stock is not doing bad. You can see on 1 hour chart has gone up, not below. For me, it's above the T line on 1 hour chart. Let's see, as you can see, it's just moving a kind of a sideways movement here. Let's watch and see. After you have gotten to this level, that is the point you should buy. At this point, for those that are long-term investors, see it now trying to cross over on a 1 hour chart. For me, it's a good one. Here, the next one that we should look at there is let's look at the fixing for Transcorp to see what is happening in that healthcare. We'll see ESK looking down again at this one. This is thought I've adjusted for this is a 1 hour chart for me. You can see that the 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 green the bull and the bull are trying to slice trying to struggle here. You can see that the money flow is coming down. Fund is not there, so below 50, around 45 in terms of RSI. But definitely RSI around this range for me is not a bad one. Might see a trigger up depending on the number we're going to release for the stock. Let's look at the day chart for 16. Meters of 15, yes, it's now at the top, at the flat with what with the MACD with the T line. Sorry, once you put that T line, it's a good one. And you can see sign after that touch almost 30, trying to rebound up, and you can see kind of a consolidation at this point from here to here, from here to here. It's a good one. And money flow is trying to look up around 58. Let's see how far the stock will go. Finally, we look at the Transcorp here. Transfer for this for almost 5 days now. This is data being below the T line. You have to go to confirm before you go. But the good thing now that we're seeing stock around 39, you're watching when you get to this level and you see a good one, you can start jumping in. But money flow on the day chart is still high, around the 70, 79. It's okay. That's for let's look at 1 hour chart for Transcorp. So 1 hour chart is trying to like also take a comeback if that is happen. Good, but let's keep our finger crossed for Transcorp. The last one I'm going to check there is I don't want to comment on it. Let's look at the international brewery. Sorry, I'm going to try to let me see. Is it the code? finally, let's look at NACO before we call it today. Look at NACO. Okay, so you can see NACO on 1 hour chart. You can see trying to rebound, but you can see it's flat above minimum, slightly above slightly below the C line. Let's look at the day chart for the stock. And still below the T line. Fund is looking down, money flow is looking down, this is also looking down. I believe that once the result of macro hit the market, it might change the trend. Don't forget that investment is about perception, confidence, and buying and selling. Space state of these two broker, the buyer and the seller performing the same in a particular stock. When you see more demand, see more buyers, price going, see more seller, price likely to go down. Let's see how it goes because I believe by next week the number that will be the market might change the face of the market. I'll say a big thank you and I look forward to see you at the Q&A session tomorrow. And I think I will encourage you to be there because the work we're going to discuss are also going to affect your bottom line, going to the future because we need to take our destiny in our hand and you need to understand the market you are playing. You need to know how to follow your regulators, how to follow your company you invested, how to also to follow the market. You must know all this. And when you know it, and also you must also bring up your understanding of the market so that when you are asking questions, you are asking questions based on knowledge and you need answer to better your what investment decision. As I say, join us at the Q&A tomorrow. And those that also able to take advantage of the visa for the birthday period, we say thank you. And it has closed on Wednesday on the 20th of July. Those that are calling me, there's no chance for you to pay the normal price. The space, the time, space, the time will resume or the period for this offer has finished. If you get enough material now, you pay at the current at the normal price. That is to encourage those that are happening with us that period to take advantage of that period to get more of the materials. Also, new materials are already on the pipeline. By the end of the month or early August, you will get those new products that will also guide you on what to do, being per-election year, and the kind of stock that is your position, both the low cap, the medium cap, and also the high cap stock that you should have in your portfolio. I will say thank you at this hour and enjoy the rest of your trading day. See you tomorrow at the Q&A section by God grace. Enjoy the rest of your trading day.